this. There we go. Share. Boom. Boom. Link. Here. There we go. Okay. And then share this with here. All right. Everyone live. Okay. All right, y'all. All right. Bang. I had to make sure that I had no shirt on, and we need to pack the lower deck. Based off of that comment that I got. Yes, I trade every day. Well, not today. Today was bank holiday, but typically Monday through Friday, we're live. We're live Monday through Friday. But yo, let's fucking go with coming into these fall months. I'm stoked. So hyped. But you don't take trades. No, I don't take trades every day. Absolutely not. If I'm being honest, August, I was ranging between 1 to 2 trades a week if I was lucky. Like, I would probably say, 1 to 2 trades a week was what I was ranging on for August. That's what I was doing. But I'm excited for this new week. We got high impact news tomorrow, Wednesday, Thursday, and Friday. So for you guys that don't already know this, I posted it on my YouTube short and I posted it on my my TikTok. So typically NFP weeks, the Monday and the Tuesday are good trading days. But since Monday was a bank holiday like today, tomorrow should be good. Tomorrow should be a good trading day. It's high impact. It's high impact news at 10 o'clock. Same with high impact news on Wednesday, which is also 10 o'clock. When that happens, pretty much like you need to focus on what 9:30 is doing. Is 9:30 providing manipulation, or is 9:30 dry, and is 10 o'clock going to be the manipulation for the next 4-hour candle, framing that open high low close or the open low high close? That's like kind of how you have to look at it for framing 10 o'clock high impact news. It's either 9:30 sets the manipulation, gets you in on the execution, and then you can get the 10 a.m. continuation, or 10 o'clock is the reversal candle, pretty much. No. You're good. As long as you're just not saying some crazy shit, you'll be fine. All right. So, looking at monthly charts on NASDAQ, S&P 500, and the Dow Jones. Right now, like obviously NQ and ES are hovering, ripping through all-time highs. And we've kind of slowed down on the NASDAQ more so. Last month's candle close was a relatively strong closure on the S&P 500. As you could see, our explosive move was because of the SMT that was set in within that monthly gap. So what I'm like currently viewing right now, obviously I'm still going to believe until proven otherwise that the Dow Jones can eventually reach all-time highs. But I think that what I'm looking at from my weekly time frame perspective, like let's compare all of these right now. So we have a pretty decently sized SMT right here from these weekly highs like this. weekly highs like this. We have the NASDAQ still within the weekly range from August 18th. So it's kind of it's not in the highest probability conditions for me to get like a clear idea of framework of what we could realistically do next. We do have a relatively shallow run of this daily low or that previous weekly low. If we look very closely and zoom in, today on this bank holiday, we dug deeper, taking out the previous weekly low and failed to do so on the on the S&P 500 and the Dow Jones. I think that what's going to happen is the Dow being inside of the August 18th weekly candle previous week and now this week. I think that what we're going to get is some sort of move like this. Like, I feel like we have to get this like clear out of these highs and see what we do from there. And I think that the SMT that we currently have right now between the previous weekly lows on the NASDAQ and the Dow and the S&P 500 is going to allow us to do that. And then after we clear out these highs, I'm going to look to see what can be framed next on the NASDAQ, because I would believe that the NASDAQ still acts relatively heavy, and I would still like to see like either some sort of drawdown lower, because we didn't really take any sort of like extreme of a range yet. And the daily is more so in like this weird tight range consolidation. So I wouldn't be opposed to framing shorts on index futures, but I don't really know how we're going to be doing that. I'm going to use tomorrow as kind of a guide, since that'll be the true week open. If news wants to trade us higher, and then maybe the Dow clears out these highs, we create another set of SMT based off of the daily chart, and we keep this high intact here, and then we kind of get like a dribble higher, like run out some sort of sweep like this, and then like end up targeting these lows, maybe these lows, something like that. I'm just kind of spitballing here, framing as to what could happen, because I don't really have I don't have a clean read on NQ from the daily, besides knowing that this is just in a price of consolidation. If I look at the S&P 500 on the daily, we had this up close candle here that has a run of a short-term high like this, and we're currently trading within that candle's opening price as a bearish order block. So if we are going to hold this high as an SMT, and maybe if the Dow wants to have one last like final sweep of this high, create some sort of swing, and then drop lower, I'll be all for that. Oh my God, my camera was so... I'm so sorry, guys. I'm so sorry. I'm sorry. I just looked now. I was locked in. I was locked in. I apologize. Was it blocking the whole time? Or was it not like, was it like completely not visible? But a quick little like overview as to what I was saying was we had that SMT set in here at the previous weekly lows like this. So what I was thinking is the Dow can move a little bit higher, clearing out that August 18th high, sweeping this while we keep in the 28th high from NASDAQ here, and the same thing on the S&P 500 here, since we can potentially have this as a bearish order block, and then we start framing some lower prices. Because, I mean, looking at the monthly, we're slowed down on the NASDAQ, and I think that or at least what I want to see is the Dow start giving some sort of push higher to play that catch up from NASDAQ and the S&P 500 acting like sick. So I want to see YM move higher first, and then I want to see bearish momentum out of primarily the NASDAQ, because it is the weakest one, looking to short to any of these lows potentially. But the daily's stuck in this consolidation. I want tomorrow to give me a good read based off of what news gives or 9:30 open gives, and then we can kind of move from there. Thank you, bro. I appreciate that for the 40K. Thank you. I use bits and pieces of it, but like it's not all based off of my strategy. Like my foundation is like the understanding of the forever model, and then like I use bits and pieces of QT that help enhance the or help enhance and also complement SMT, because you guys already know how important SMT is into my trading. Like it's literally no SMT, no trade. It's like the most important factor of price delivery. But from this view of what I have on index futures, I want to make a little poll and I want to see what you guys think. I want to see what your bias is for index futures. Indices. Bullish, bearish. So I want you guys to vote, and I want to see where you guys are more so leaning towards for prices on index futures. And based off of exactly that monthly, that gap is still looking very nice. Even though there is the SMT, it's just we're still stuck with it. We're still stuck within this August 18th candle on NQ. And we have a shallow run of the previous weekly low. But I do like this SMT that formed here. And I'm looking to see at least if price can create another set on the Dow here to then go lower. And also, if you guys have not already done this and capitalized on this, Apex's 90% off sale ends tomorrow. And it's the cheapest and probably best sale that they've announced. The 50Ks are literally activation fees are $85, and the 250s and the 300s are $37. Like the cheapest PA fees or lifetime PA fees that I've seen. So make sure you get that for one shot, one kills on Friday. That's what I want to see. All right, so a lot of you guys are bearish. And then I would say if we are bearish and we get bearish price action or bearish structure, then the low, like what I would look for is this, that August 20th low or that weekly August 18th low, like this. That's what I would look for, like these. Yeah, no, I have to zoom in very, very tight here. Like we just tagged that previous weekly low here and then popped after, but I'm not really sure what price will do tomorrow, or unless price comes back into this 4-hour gap and we frame anything from there. But I would want to see the Dow Jones drive higher, clear out this high, and then we form some sort of bearish structure out of NQ, rerunning these relative equal lows. Now, this is my view on index futures. I'm going to go over still gold. I'm going to go over foreign currencies, and I'm going to go over crypto as well. But yeah, like the one shot, one kills on Apex, it's literally like it is a gamble. It's only something that somebody should do if you have the money to basically just full port in an account. That's literally it. You put a buy limit and a sell limit, both sides, and then whatever side is the release, it will typically rip in the one-sided direction, and you would pass your account in one trade. But back onto our gold. This thing is finally starting to move. Like it's actually moving and trying to escape the range that it's been in for so long. Um, no, you don't. They don't. I'm talking about an evaluation, not doing an NFP one shot, one kill on a funded account. I would never, ever, ever do that. You can't do that. But anyways, gold's finally expanding. We're clearing out the highs, getting out of this monthly consolidation, being inside of April 1st monthly candle for legitimately months on end, which is crazy. So I guess what is going to happen is this will eventually reach its all-time highs objective point alongside with silver, one of the two, most likely going to be gold, reaching out to 3595.8. If I look at the weekly chart, there's not really like a framework behind a weekly gap that we could utilize for a trade because last week's expansion was pretty heavy. If I look to the daily obviously has all of these bullish fair value gaps left behind. So what we can do here, or what we can anticipate, is hopefully price to draw down at least like maybe tomorrow inside of this or one of the two daily gaps, and then price framing some sort of market maker buy model from these gaps to then go higher and like have a reaccumulation stage of a market maker buy model. Because like if we're labeling these like price having a low risk buy down here, we want some sort of accumulation stage of the market maker buy model, and then price will eventually reach to the all-time highs objective point. We did have a very explosive move, so it's either gold will retrace, create the low of the week tomorrow, and then price expands from that point on, or price consolidates tomorrow. We create the low of the week on Wednesday, and then NFP rips it to the highs. One of those two or one of those three ideas could be in play for us to capitalize on a trade, but we have solid expansion higher. We left behind fair value gaps. We want to see one of these fair value gaps on a higher time frame, key level perspective, get tagged, frame a trade, daily internal to external range draw, and then move from there. That's what I really would want, because then I would actually be interested in this, because I love trading trending markets, and gold is finally trending and expanding, looking for a clear draw to just clear out all-time highs. So if you guys can get alongside of that move, try and do it and set your alerts at 3506.9. Set your alerts on silver at 2940.05, and then see which one can get tagged. And then you'll be able to be alongside of that move. So keeping my eyes on a higher time frame perspective, seeing if we can capitalize on the run of that expansion to all-time highs. Now, foreign currencies, we've pretty much, the last outlook that we had together was very well orchestrated. So if we invert the monthly chart on the dollar index, you can see as of right now that we have a clear SMT at these monthly lows, with the euro being the strongest pair, and we have the pound making the lower low, obviously like this, and then you invert the dollar index corresponding to the pound just like that. So we have an SMT set in, with euro being the stronger pair. But obviously foreign currencies over the summer months have just been very ugly. Very ugly. But looking at from a higher time frame perspective, you can tell that price is obviously gravitating to the highs, which hopefully can get hit. It's just these, even on a weekly time frame perspective, like massive wicks with small bodies. You don't like to see that. And you want to see big bodies, small wicks, because that'll mean that you get a big chunk and a nice clean move apart alongside of that weekly candle print. So this is that corresponding high on euro with the corresponding low on the dollar index like this. And then the corresponding high on the pound is here. If we go to the daily chart, or actually a weekly chart first, just like that. Now, if we go and look at a weekly perspective, you could see that the pound has this down close candle resting here that cleared this short-term low. We closed above it, and we're utilizing it as support. So that's a nice weekly high probability order block that price could use for expansion to continue higher. Now, alongside with looking closer into this, we have an SMT set in at these weekly lows like that, just like this here. For a weekly objective point for a low-hanging fruit, I see GBP cleaning and running to the highs at 135.947. And then I see the euro reaching this resting high potentially here at 117.426. If I look at the daily chart, the daily open today was flat. If I look closer at the pound, let's look at the daily with this SMT set in here. Let's go like this. Mark this up, make it more clear. Make that an SMT. Make this an SMT here. And we fractalize it even more. Pound clearly looks much more strong. Let's go down to a 4-hour chart. Euro's 4-hour structure doesn't look too hot to me. This doesn't look like that good of price delivery right now. I mean, we're inside of a 4-hour gap right now. Pound looks relatively better. Foreign currencies really just have not been on my highest watch list realistically, but I'm happy that we were able to at least keep ourselves alongside of this big daily expansion here, because last time that we called out the draw for euro, it was down here. But ever since this being smart money reversal, this being the low risk buy, price has just accumulated and consolidated for practically all of August. So hopefully moving into this new month, you guys can get some better clarity and some nice expansion moves on foreign currencies. But looking at this from a 4-hour perspective, I don't see that clean of PA, and dollar isn't really isn't really making a better help. So this high here is also the SMT set in, and then the corresponding high on the dollar index here was already ran that corresponding low. But what we could see is either we expand from this 4-hour gap on euro, or we have to come down lower, and eventually maybe if I look here, it's either euro comes down, sweeps some sort of sell-side liquidity pool down here, or even Friday's low, and we get like a drop to clear out any of these lows here and then expand higher. But eventually I want to see that high at 117.427 get cleared, which is that just daily resting high here, like that. But again, my view long term is to see 118.300. That's what I would like to see. I would love to see that. So right now we're actually we got a relatively even split for you guys' view on index futures. 57% bearish. This should be a good trading week. August has been crap. So historically speaking, actually, guys, the NFP release in September typically is one of the most volatile ones. So keep that in mind for when you come into the closer end days to NFP, primarily Thursday. I would expect Thursday most likely to consolidate. But the difference between an SMT outside, so an SMT inside of an internal range liquidity pool is legitimately just framing a continuation trade based off of what the higher time frame order flow is. So like you want to see price reverse from an internal range liquidity pool because it is it is a retracement from a higher time frame trend, pretty much. And then like you're looking at SMT at an external range high run because that is most likely the reversal point, pretty much. And then, yeah. So that's kind of my view on foreign currencies. I want to go over crypto as well. I already posted this on my Twitter, but as of right now, my eyes are drawn to this monthly gap on Bitcoin down here, this unmitigated monthly gap. So I would love to see Bitcoin clear out down to here. This makes the most logical sense, and it looks better from a weekly perspective standpoint. Why? Because this weekly chart has also closed off this weekly bullish for value gap. So we don't really have any sort of means of support right now. The only thing that we have is a means of resistance on crypto. So in order for me to then frame my next long position, it would have to be from a higher time frame key level, aka a monthly internal range liquidity pool, which would make sense coming down to here, running this extreme low, because we are in this range from this low to this high. Now we have finally closed off our first higher time frame bullish key level or bullish PD array. So I want to see this come down into here, our first or only monthly untapped key level. Same thing with Ethereum. If we also look at this, we have this monthly gap here, or this weekly gap here, and unless ETH like holds its strength and still starts to frame higher prices and eventually like driving and clearing out the high again, if it wants to do that, I doubt Bitcoin is going to reverse from just this random point in price. Like I don't think that's going to happen. I believe that price has to come down into here, this monthly untapped gap below 100K, and then we could frame something from down here and get a nice swing trade on Bitcoin if we get a monthly to a daily market maker buy model, which makes the most sense in my opinion. I'm not and haven't been confident in foreign currencies in a while because it should just be blatantly obvious to you. When the higher time frame is in a consolidation, and on top of that, not even just the higher time frame, or not even just the daily, the weekly too. The weekly has been in a barcode, and same thing with the dollar index. The dollar index has been in the tightest range for practically all of summer. This is not tell me high probability price. And it should be very obvious to you as to why it's not high probability price delivery. The wicks are massive, way bigger than the bodies, and that's just doing damage in regards to lower time frame price action. And it's just going to hurt you even more when I'd much rather be trading index futures, which have bigger bodies comparing to the wicks. Obviously, August was slow, which is why I also said that my trades and my frequency of trades have been 1 to 2 trades per week on August. But then if you go back to July or even June, you could see bigger bodies, not big wicks, because you're getting the chunk of the weekly candle like Tuesday, Wednesday, Thursday expanding. So that's kind of my view of viewing low probability versus high probability price. This does not scream to me saying I need to be active in this. Yes, I can tell and look from a monthly perspective that price is obviously gravitating higher, but then I go down lower, one click, and I can see just the weekly chart has been in such a tight range for all of the summer months. So if foreign currencies act slow and don't really do too much crazy things between the times of Tuesday, Wednesday, Thursday, expect Friday to do and clear out a lot of the damage that we have from what we're getting on these higher time frame perspectives. But I would like to see euro reach this high. I would like to see pound reach this high up here. But short-term, low-hanging fruit objective point, I want to see pound clear out this resting high at 135.946. And I would like to see the euro clear out 117.425. That's what I really want to see. I'm not going to show you my journal. I've given out my journal templates, and I've also shown my journal multiple times before in the past. That was not what I was going to do today. But I have given you guys exactly what you need to be journaling, how you need to journal, and basically a good thing and a good ad. If you guys still struggle, something that I used to do in the past, this really helps me a lot. So when I was like in my struggling phases and I really didn't have a good grasp on navigating price delivery, every single day of price action, when I was only trading like before foreign currencies, exotics, all that sort of stuff, I would daily recap and weekly recap, annotating every day's price action between ES and the NASDAQ. And I would document it for months. But that would help me notice patterns in the day, notice things happen at certain times of the day, which allowed me to refine my edge and my model. So it's something that like obviously sounds very time consuming, but realistically it's not. It's just something that like I feel you guys would really benefit to get more confidence in seeing certain things repeat over and over and over again. Like all you're doing is basically getting in your reps to get stronger and stronger and stronger and more confident. And doing that will help you get more confident in seeing certain things repeat every single day and every single week. And that's also how you find out when your system or your mechanical approach to price delivery prints the most. You'll know what times of the day, you'll know what session, you'll know what days of the week, what weeks of the month, all that sort of stuff. What works the best and what doesn't. Because that's refining your edge. And the more refining you do, the better you get at it. And then the more confident you get at your clicking of the button. Like a lot of you, like sometimes like you'll back off from executing, but you back off from executing because you didn't have the confidence to click that button because you just haven't seen it happen enough. And when it prints, you're like, damn, I actually should have taken that trade. You just haven't seen it happen enough times. So it's something that you guys can do and it will help you, but like it's just a matter of like, will you actually do it? You know? September, October, November are very good. For me, at least. The fall months are always very good. When it slows down is when I end my trading year at the first NFP of December. Because then you have Thanksgiving at the end of November. And then you have that first NFP of December. And then after that, you have like Christmas coming up. You have the end of the year. The yearly candles capped off. And then you have New Year's. So that's something that you guys need to take into consideration. Like for me, at least, like I know when to cap off my year and I know when to stop. Because that time from that point on, that's just family time. I'm just spending it with them. Just spending it with them. That is my end of the year. That post week still is decent, Vig. Things that help me out backtesting like crazy. I also say this too. Backtesting, like if you guys also still aren't confident in refining your edge, it doesn't hurt to take like an hour of your day a night and just go on like FX replay and try and backtest your system. Like I have done that. I'll still do it occasionally if I want to test out new things or if I see certain things repeat and I want to add to complement my mechanical system, I'll go and do it. Like I'll literally go and do it. And that should be something that you guys don't look past. Like backtesting will never hurt you. It will only hurt you if you're doing too many things or adding too many things that could just confuse you. If you want to add certain things that complement your already working strategy, that's fine. But don't do a complete 180 if you already have something that's working for you completely fine. Yes, I take B-rated setups all the time. A majority of everything that I took in August was B-rated. Like a massive majority of everything that I took in August was B-rated. And you could see why, because price hardly was trading from higher time frame key levels. We legitimately hardly had that. A majority reference of my trades from August were runs of previous daily highs or lows that had SMT. And then I would frame the day based off of 4-hour candles too, alongside of that. And yeah, that's another good point. Crudy Jock said, only thing you have to figure out on your own, it's your psychology. So like it will always be the trader that is in the wrong. It's never going to be the system. Somebody said something to me about replied to the story that I had when I said, ask me a question. And somebody said, like, I have a 65% win rate, but I still managed to lose trades. That's the system is not the problem. The problem is you as the trader. You need to keep yourself within daily limitations, keep yourself within weekly limitations, and you also need to make sure that your losses are being outweighed by your wins. Because if that's not the case, then you have a risk management problem. How much are you risking per trade? And how much are you risking, let's say if you take a loss, how much are you risking on that second trade? Also, what is your risk to reward metrics? Are you looking for 1-to-1s, 1-to-2s, or 1-to-3s? Whatever it is. You need to have that all calculated. You need to make sure like that you know how much you're going in and how much you're getting out. So if that's not calculated and you're not knowing that before even getting into the trade, something's wrong there. Like very wrong. That's a fact. Listen to what Vig just said. And that's the biggest importance here is the journaling factor. You're not going to know how to fix yourself. You're not going to know how to get better if you don't journal and collect as much data as you possibly can. Like I didn't come up with this forever model out of thin air. No, I came up with it because I did everything that I said prior. I would backtest. I would journal and document every single trade that I took. I would compare my losses to my winners. And also I would daily recap every single day's price action and every single week's price action. And I would notice certain things about price and I would notice certain signatures of what was the most effective and what was the least effective. And once I got a grasp of that, that was when I was able to combine everything to then call it my model. And then ever since then, I'm still able to refine that and make it better and better and better. Because as a trader, yes, it gets boring at certain times, but there's always extra work that could be done to refine your edge. Like we're always learning. Every single year that passes, month, week, whatever it is, we're always learning and working on things to make us better each day. Always the case. Yeah, like that's the biggest thing. My model is very simplistic. It's a very easy approach, but there can always be work to be done to make it better. And the work is boring, but it's boring because you see the same thing repeat over and over and over again. And obviously, if certain things are like, let's say, forever model, obviously, it's most impactful in a trending market. But when the market is consolidating and it's ranging, you have to make certain adjustments to that to then refine your edge to adapt to price conditions so you could actually make money. And that's some things that I used to neglect in the past, but I was able to refine that, fix it, adapt, and get better. You could take both A-rated and B-rated setups, but just make sure that all your setups that you're taking are refined and labeled from protected highs and lows that you identified through SMT. But I think that what we have going on for this week will be a great trading week. Tomorrow should be good, and same with Wednesday. I will say that Thursday will most likely be a low probability trading day. That doesn't mean that I won't be live. I will still be live trading and looking for a setup if it presents itself. But I think that Friday will do the heaviest amount of damage this week in regards to volatility for the weekly candle. And you guys already know this. NFP typically sets the low or the high of the month of that monthly candle. So we'll be able to see how price reacts, how we print, and I want you guys to follow the process as to how I tell you how to navigate utilizing the economic calendar aligned with price delivery. So, yeah. And I thank you guys for hanging in for the entire time of the outlook until the end of the year. And when I cap off my my year of trading, I will be doing outlooks every Monday after either one New York close, or I'll probably do it roughly around this time too at 2 p.m. Eastern Standard Time, because I feel like a majority of you guys are still up by then, even though it could be late for you guys. But I kind of want to coordinate this better to make sure that people can see it live in action and actually ask questions. But I like the mixture between the analysis, the price review, and like a little bit of like psychology rants that help you guys in regards to like getting out of that slump of being either break even or still stuck at finding your edge. So if you guys want more of these, obviously like the video, comment, all that sort of stuff. We are literally split right in the middle between a bias between bullish and bearish, which is funny. But take it slow this week, guys. I hope you guys all print. Again, capitalize on that 90% off sale. It ends tomorrow for Apex. Pass some accounts this week. Nick will be doing the one shot, one kill in our Discord on Friday at 8:15. So make sure you join and you're in for that. It's in the free section. You'll see it all. I already did EU and GU. Just go back in the Outlook and you'll see. But yeah, I hope you guys kill it this week. And thank you for joining. So be safe, everybody. Good luck, good trading. And let's all fucking bank. Take care, y'all. And I will see you tomorrow for the next potential video, if we catch a trade. But take care, y'all. Deuces.